Hello, everyone, and welcome back to another midweek review and market forecast. Today is Thursday, May 14th, 2026, and it is 10:21 p.m. And I'm joined today with Mr. Just in Time.
Hello, everyone.
Welcome back, everyone. And today is actually going to be one of our first public on YouTube videos. We obviously have a massive playlist of unlisted videos, but today we decided to put this one to the public. We are going to have a very amazing video for you guys today. We will be speaking about the week of the markets we've just had and that we are currently within. This week is CPI week. We have the second week of May, and we'll be diving deep into what's happened this week. We normally do this on a Wednesday, so I do apologize for me being delayed, guys, but because of what's happened, we do now have a lot more to talk about, so it kind of does save us a bit for our video on Sunday, so we won't have to talk a bit we won't have to talk that much, and we'll be able to talk a bit less. So yeah, we're gonna go over essentially Monday to Thursday of this week, and then we're gonna talk about what we expect for Friday, and that's pretty much it. So the main things to mention is we have CPI this week. So Tuesday 8:30 CPI, we'll be looking at how that had an impact on the market, and then Wednesday BPI. Okay, so with me, guys, and this is very important, as I always say, you need to have rules and understanding of the economic calendar. You need to know which news events you avoid, which news events you trade, and kind of understand your limitations as well as your strengths. So with a CPI week, normally for me, in typical scenarios, I'm expecting price to not be doing anything before CPI. I'm expecting for price to be a bit still, okay? And then once CPI has released, we then see a lot of volatility. We then see a lot of movement happening in the market. And the reason for that is simply because people do not want to be putting their money in a risky situation. When we have massive events or news events like CPI, then obviously we have a very volatile market, right? This event and this news is going to be very important for market sentiment. Therefore, why would you place a position, especially a large one, early in advance of that? You want to wait for that to be positioned. Okay, so that's kind of what normally happens. So we're going to speak about how that impacted this week, what that looks like. And again, because we have PPI, I normally do treat that the same as CPI. We normally have a few major events like CPI, PPI, NFP, FOMC, that we kind of tend to avoid trying to position ourselves in advance of, but we'll see how that was put into this weekly picture. And yeah, after Wednesday, we have Thursday, which was for me the best clean day because we are now post these news events, and we'll be looking at those events to see what has happened for us to then be able to understand what Thursday should do. And we have a news at 2 o'clock and news at 8:30. So for me, that's an amazing combination of news events because I typically want to see early London movement and then sort of New York continuation. So this looks very good for a manipulation in London and movement distribution expansion in the New York session. So that's a bit of speaking about the Forex Factory. Apologies for that, but I thought I'd go over that a bit again, just for anyone that has not been here before. So let's get into it, shall we? You ready for this, Justin?
It's there.
All right, so guys, for a while, and in the last video, we mentioned that we are going to be very consistent with how we follow bias. Okay, there are going to be times where, just like this week, I did have a very big inkling that we will see a movement towards the upside. Okay, even though it was looking very bearish beforehand, we were still around this weekly breaker, which is actually a mitigation block, but I just call it a breaker because functionally it's doing the same thing, and it has the same parameters in terms of risk and stuff, and where it's being supported and respected. But regardless, as I was saying, even if price is even if we have a bias that's bullish, I can't just act on that bias until price proves it to me. Okay, because it's not about trading what we want, it's about trading what we see. Okay, and we need to know what things do we look for us to then switch bias, for then to us to now have a narrative that we can trust and be confident in. Okay, so we're going to speak about that a lot. As you can see, this current weekly candle we have ran lower, and bear in mind, guys, we are in discount. If anyone is not sure, when we are down here, if we was to look at a range, we could look at low to high. There's a lot of ranges within here, but just simply we are in a discount, and we also had these equal lows slash reference equal lows that were raided. And of course, after a sell side raid, you're going to expect bullishness just in general. And if it isn't going to be bullish after that sell side raid, whatever should happen, if it's bearish, should be very quick, and it shouldn't spend too much time back in this range, and it shouldn't really go back above this high. So yeah, we had a massive expansion on the weekly chart. Let's have a look at what that looks like on the daily chart. Cool. So we got the daily chart. Again, we got a reference low that we've stemmed across to the right hand side. We can see how we've gone beneath it once and then obviously reversed and went higher, went back to it as a target in the future, and we came back to take out that. Then we had a rejection block here, and we close, funnily enough, exactly on that low there, don't we?
Yep.
And then now here's what's key, guys, because we've opened the week, we've rallied up into this order block, and we have then pushed lower. You could look at this as a breaker as well. There's many things we can look at, but we've rallied up and then we've moved lower. Okay, so again, if you are bearish, you want to see us have some prolonged expansion and now be able to get beneath these lows as well, because you know, these are relatively equal, so you'd want to expect them to go beneath that. Okay, what do? We don't go beneath that. Now, just from the first sign, if we do make liquidity that is very clean, you want to see it get taken out. And if it is not going to do that, and we are going to be bullish, especially because of how we've reacted to this low, then you will expect us to expand away aggressively. So Tuesday we had CPI, and Tuesday's daily candle did do a lot of movement. It went from down here all the way back into this void from the previous midweek, and also taking out Thursday and Friday's relative equal highs. You see that?
Mm-hmm.
That's very key. And then Wednesday we've pushed higher. We do have, there are many things we can look at. I want to show you guys one thing which, to be honest, I don't need to do, but it's something I like to look at. So at one point, this level down here, on the weekly chart, this level here, this was a rejection block. Now let me quickly just put a red line here. So yeah, at one point that was a rejection block. Okay, so we did close beneath it, we did return to this weekly inversion gap and then push lower again. Okay,
Yeah.
now this rejection block, I was monitoring how we close inside it, and we did obviously close beneath 50% on that candle, but then we opened above it here and then we used it as support and then pushed higher. Okay, so why I'm even mentioning this weekly rejection block when we were just on the daily chart is because if we are going to be bullish, essentially this level that was used bearishly would become a new level that would support price. You know what I mean? Because we'd have to go back through that level, if that makes sense. Okay, so what you'll see here, and I actually haven't even drawn it the right way, which is a bit embarrassing, so let me quickly draw it the right way. And in fact, we'll have it as a gap because that's the best way. But you see how we have a void here, Justin?
Yeah.
Because of this void, it's going to actually be, I'm going to be looking at this candle, not that candle, only because we have a range now. It's not just because normally these candles are going to have the same opening, a close and opening price, but there's a gap, there's a void here. So that essentially, if we were going to look at a you know, a rejection block, technically could look at from here to there as well. Okay, so that's why. So in reality, I'll leave both of them there because that will still be nice to look at. What you'll see regardless is that this level here is a breaker, okay, or a mitigation block. As we said before, we have a movement lower, and then what does that candle do on Tuesday? Order block validated, no? Breaker validated, no? We also have a fair value gap on the left that we've ran up into, and then the next candle Wednesday opens, travels lower into this breaker, also into this. Yeah, you can see how beautiful it is when you look at the gap, because look, you have a down close candle here.
Yeah.
So that was previously a bullish order block, and it's now being used again for the upside over here. But you don't need to look at that, so I didn't need to include that. I just thought it was interesting because I did have it on my charts before, but I took it off. But yeah, nice movement on Wednesday, and then Thursday. Do I need to say anything else? That is just beautiful expansion, isn't it, Justin? Beautiful expansion. But yeah, we're gonna dig into that in a second, guys. So try not to yeah, just get a napkin because your mouth's gonna be watering this video, guys. We've got a lot of gems to be getting into. So the pound reference high over here. I also have this level above. There's buy side liquidity SMT blocked. This is just when we look at the market maker models and understanding what the target of price is going to be. Essentially, this target wasn't met, whereas it was met on euro. And when we see that, that can potentially be signs that we can expect something like this happening. But we're going to talk about again when we can definitely turn the lights on for this to be confirmed as not being met, because that has happened now. So yeah, on the weekly chart, what did we do? We opened, rallied up, took out the previous week's high,
Yep.
and then we have ran back lower. And we mentioned this on Sunday, but if we were going to be bearish on the majors, then these equal lows on the pound, they are literally screaming to get taken out. Okay, they are screaming to get taken out, and also they are inside a long wick over here. Okay, so normally when I see that and see these lows are just short of 75, but because I'm bearish, I want it to close beneath 50. I want it to get beneath those levels. I want it to get beneath all the levels, in fact. But I would be targeting the 0.5 level. Because I'm bearish, I expect it to at least get there. So I would be targeting that level on a terminus basis, like whether I want my weekly objective to kind of be to the downside. That's kind of what I'd be looking at. That doesn't mean your trade has to be exited there. No, no, no. But that would be your ultimate, drawn liquidity.
Mm.
If we look at the daily chart now, this one's a bit spicy over here. So the daily chart, we have this premium wick, 0.5 level. We spend some time in premium up here because we're above a high, right? We're above that high here, aren't we, Justin?
Yeah. Mm-hmm.
And we have this rejection block, another level in premium. So we are in premium already, and we have another premium level. So if we are bullish, we want to, as you saw here, run to it and then push through it. But what do? We end up rejecting those highs here, and
Yeah.
there is more SMT going on here. We reject those highs, and then Monday
Back in.
moves
Yeah.
lower. Now, because we close up here,
Mm.
I do understand why some people would still be looking bullish, but as soon as I see that close, I am bearish 100%. The reason why is because of where it's happening. It's in the extreme of the range, and it's also happening early in the week. And when price does that, when it runs lower and then comes back up like that, you'll most likely see on the lower time frame there's a potential shift in structure. Okay, and we'll look at that when we get into the 4 hour, etc. But just from the daily chart, Tuesday has given us the confirmation by running lower aggressively, getting beneath those two candles, right? You see that? Those two
Mm-hmm.
candles are a liquidity point, okay? And we have this liquidity here inside the range. So we have like that failure swing here, that liquidity. So that gets targeted on Tuesday. And let me zoom in a bit just because I know a bit more things we can talk about here. You can see that there's this little BPR here where we finish closing for that week on Tuesday.
Yep.
And then what do? We rally back up the next day. Well, I said that week, sorry, that day. We rally back up the next day into this breaker and inside this level here. And what do? Another push lower. Okay, so Tuesday CPI, we kind of confirm that we're bearish. Wednesday is the first movement lower, but notice that first movement lower is also doing something very important, Justin. What is it doing?
So it's reducing resistance and engineering liquidity,
What else is this candle doing?
and it's closing beneath the breaker.
Exactly.
Mm.
Closing beneath the breaker. Now we love a breaker, Justin, don't we? But we also know that we need to see breakers that are high probability. Now, certain high probability breakers are going to be in certain areas. They're going to have a value gap paired with them, right? In this case, we have a daily chart breaker, okay, which firstly, just the fact it's on the daily time frame is already a big key. Now, what
Yeah.
do we need to address? We need to address if we were bullish, what would we want to see? And I'm going to make sure I mention this because it's very important to understand what I'm going to say to you. At this point, we have a bullish market, okay? So there will be still some people after Tuesday's done this close beneath these lows that will say, because we haven't closed beneath this low, that they're
Mm.
not sure yet. And if they were going to wait for that, Justin, you see how it would be too late?
Oh yeah, I don't. Yeah, way too
Right?
late.
Because you would say on Thursday, oh Thursday, I'm sure we're going lower now, and that's fine. Okay, that's still fine. But my point is to say that that's not the first sign. That is not the first clue. Okay, so what am I saying? I'm saying that if we were bullish, when we see lows, we want to see them be rejected and price go to the upside, wouldn't we? So
Yeah.
what I'm saying to you guys now is that we have CPI and PPI. So if Tuesday has done this, and then let's say I'm not sure that we are bearish yet, then Wednesday, once it does go lower, and it does actually also get beneath previous day's low, it does sweep that. If we are bullish, we want the next day to really go higher aggressively because it will show the soup. Okay, we want to see that sign, and we want the close of the candle not to respect the breaker, not to validate it. Okay, but what does it do? It validates that. Okay, so I want you to realize one thing, Justin, and everyone listening. Monday, Tuesday, Wednesday, yes, we did move lower, but do you understand how all of those days set up to allow this day to do what it's just done here? Okay,
Continue.
continuation, exactly. Price has literally optimal trade entry on Wednesday's range and absolutely farted. Okay,
Mm.
absolutely ran lower. Now look at the range now. Equal lows. We have a long wick and discount. We have the 0.5 level of that measured out. We also have, funnily enough, a BPR in the discount 0.25. And would you have it? Where have we just closed the day and opened the next day? Exactly at that level.
Be random.
It is very random. I don't know how anyone would believe that it's scripted. There's definitely no algorithm, okay? It's all random. So that movement lower is just beautiful, okay? From high, breaker, low, liquidity, 0.5 level, and PD rate. And we only wicked here. What do I say about when we wick into a PD rate, Justin?
I think anticipate a return.
Exactly. Anticipate a return. Doesn't mean it has to happen straight away, but eventually it can become a great draw on liquidity. Now that draw on liquidity could be for a continuation, or it could be to hit that temporarily, provide a retracement, and continue lower. But we will talk about that on Sunday's video. But for now, you can see the pound's movement. Very beautiful, wouldn't you say, Justin?
Yeah, man, that's what I want to see.
Beautiful. Have we gone to the Euro yet? No, we have not. We have, haven't we? Or we haven't. I don't think so. I don't
Ah,
think so.
love it.
We have not. Okay, guys, welcome to my favorite pair of all time, the Euro USD. So, what do we have on the weekly chart? We have a weekly rejection block up here.
Mhm.
We also mentioned that propulsion block from the left. We've accumulated over here, relative equal highs on the left.
Mhm.
Right, we've raided those highs, but look where the bodies close.
Yeah.
Oh no, you know what I mean? After that,
Mhm.
problematic scene. Now, I want you to realize something, Justin. That high was, I mean, this candle was made after that one. This candle had an important thing. It had a continuation and it had an end at this reference high over here. Okay, it had a
Mhm.
continuation and an end. Okay, so that's essentially making a low and then making a high. The next candle then was an inside candle in that range.
Yeah.
When I see that, I'm now going to be expecting to see the high and low of that candle raided. Okay, I want to see us manipulate this range to do something else. Okay, so what do we see here? This high gets manipulated here.
Mhm.
We open back inside the range, and what did we target?
Okay. No.
The low. Okay,
Mhm.
and we recently had a weekly inversion. I mean, sorry, fair value gap here that pushed us higher. and now we've taken out that whole candle that's gone up. So if we were to close here, then this would be a order block, right? This whole candle.
Yep.
All right, cool. It's nice. Now the daily chart took out that liquidity. This was the market maker buy model. Then we retrace back into this level. What did we say a second ago? We said areas that have been wicked to, BPR right here, expect them to be returned to right there. What did we do? Return to it, and then the next 2 days went higher, didn't they? And then what happened after that? Went up to this daily gap, which at that point was an inversion gap acting bearishly. We had a movement that continued lower. Where did it close? Exactly on that low. Beautifully, in fact. And we took out that liquidity, but we rejected that liquidity because we closed back inside the range very nicely. We did make a rejection block. What did we do then? Pushed up higher. Obviously this became a valid order block, and we continued up back into this range, taking out this high, getting into this order block again, also engineering liquidity. But what happened? We didn't close above that gap, still used it bearishly, went back lower to where? Rejection block, discount, but also back to where? The BPR again. Okay, then what happened the next day? Massive expansion. Where to? The engineered equal highs. Okay, we took out those highs. Now this high came back here, didn't close above the gap again, did push higher again, but look how we're reacting to the reference high over there, Justin.
Clean.
Too clean. Now Monday again returns to this daily gap. So what did I say? If Tuesday is going to be bullish, then we want to see it essentially run higher from this daily gap. But what does it do? It actually closes beneath it. Now that is bad for any bulls out there, okay? That's not good. We have a daily gap that's been inverted. We close beneath it. We open, trade back up into it. And then what do we do again? We run lower again on Wednesday. So CPI, PPI, they were actually used for us to understand the bias, okay? So it's completely fine to have not been in the market beforehand, because in fact you're putting yourself, your edge, your model in the best probabilities, okay, in the best environment. So that closure on Wednesday confirms that as an inversion gap, and this is going to be a very key level. Notice this order block on the left. We have a gap inside. So firstly, this wick inside there, the fact we already came in here, we'd want it to take off, sorry. And if it went back lower again, we actually wouldn't even want to see a majority of this gap being used, just because of the order block placement inside that gap. We do have this wick here that we trade into, which is going to be a discount PD array when you use that with the gap. So we run into that, and then we close beneath the daily gap, use it as an inversion level, expand lower, taking out the previous week's low, and then also digging into further the daily rejection block. Whoops, didn't do that. See how that daily rejection block's been targeted beautifully there. Very good, very nice. All right, cool. So that's what happened on weekly and daily charts. I know that was a bit longer than most people would expect, but over here we don't actually just do a quick A, B, and C. Here's where the market's going. We actually want to apply logic and understand how to use logic consistently, and also understand when we can flip sides. Because as I said at the beginning, I wanted price to do what we're seeing here this week, but going into the week, I couldn't, as of that point, say it was going to happen for sure. I could say that I can expect to see it happen. So what did we do? We said invalidation levels. If this daily gap gives up the ghost, we can see it as an inversion level. Okay, what did it do? It gave up the ghost. After Monday, I'm already interested. Tuesday confirms, Wednesday validates, Thursday expands. It's very, very disgusting. All right, cool. That's the weekly daily chart. Do you have any questions about what you've seen so far, Justin? Anything you want to say?
No, I'm good.
All right, cool. So let's go into the 4-hour chart, because in the 4-hour chart there will be some things we want to pay attention to. So just like before, and I hope people don't get lost. So let me show them daily chart. The reference low, failure swing over here, and then we've pushed higher. So on the 4-hour chart, we have a level. We swept, went back into it. So that's the low, okay, of the range. We come back
Mm.
to that low of the range, come back again, and then here we respect it. Go back up into this order block over here. We're looking at 50% of this order block. We do have a for value gap beneath it, but when we have a for value gap in combination with a wick, we do know that the algorithm is gonna favor the wick,
Mhm.
okay, and we're gonna be looking at price coming back up into this order block. So 50% run up into it, taking out highs. That's essentially a bearish setup. And then what do you see? We do have a movement back lower, but funnily enough, again, Justin, we return right here to that reference low, and we do not give
Yeah.
up the ghost. And then what happens again? We start opening back up here, and we actually did our review on the very open on Sunday, on the very open of this candle, and we
Mm.
gapped up, and I said to everyone that this order block here, if we are bearish, should keep price down. And we had a fair value gap here as well in combination with that. What do?
Yeah.
We trade up into this order block. We run a high, we close back inside, and we do respect this 4-hour gap, and we have a movement lower on Monday. But then we failure swing again with that void. You see that void? We close it in, and then we failure swing and then go up. This candle fair value gap combination, order block fair value gap, this is a very, very beautiful high probability combination fair value gap POI. Okay, and I know I said a lot of like words as if I was doing a Street Fighter combination attack, but all I mean is that order block and fair value gap is a very nice combination, especially when it's inside the gap like that. So
Mm.
what that means to me is when we do have this closure above here on 7 p.m, I know from that point we are bullish. We have had our bullish change in state of delivery. Okay, that is my first sign. And also notice when we do that close at 7 p.m, we are also closing above those highs again over here. So we close above those highs. Now, if we were going to use this failure swing, because if you think about it, this is our range, low to high. That's our range that we're doing all of that inside, isn't it?
Yep.
And now this was the previous high before that. So this is essentially going to become an early mitigation block, which is where we have the PD arrays in combination with it. Okay, so we have that support going higher. When price takes out this buy side liquidity target here, this is
Yep.
your confirmation of your bias being in play. Now again, when does that happen? It happens on Tuesday. Now I want to mention something, okay? So I said at the beginning of the video that we do not, particularly for me, want to be trading before CPI. Now this week is very interesting because price was actually, as you can see here, it only had one area to go, but look at the time at which it did that. It did this at 3 a.m. It did that move at 11 p.m. So
Okay.
these moves are happening overnight, and London session is delivering that move. Now from London, we are already in premium. So look at 7 o'clock and 11 o'clock. They are doing some work in this void, but they're happening at the wrong times. Essentially, we finished the model. We're doing the consolidation at the end of the model at the time that I would normally be trying to trade. So sometimes I would look for a post CPI trade, but as you can see from where we were, it was not happening. And if we was to look at the 1 hour time frame, we have 7, 8, 9, and we do have a push up here. But just look at this slop. Like, it's not really something you want to get involved in, as you can see. And then again, if we look at Wednesday, guys, we have the level that was a mitigation block now that we close above at 3 o'clock. Okay, we have a gap here that is going to be a breakaway gap. Now, why do I know it's a breakaway gap, and how do I know when it's formed that it will be a breakaway gap? I'll tell you exactly. We have a 4-hour inversion gap here. This level is essentially the PD array, the change state of delivery level. Okay, so if we have a value gap here that we're kind of supporting and pushing away from, then if that same candle that returns to the gap creates its own gap, more often than not, if we are trying to go somewhere with speed, that gap will not be filled in. Now, what confirms that for me? When do I know that it's definitely a breakaway gap? I know it when we close above this candle and close above that high over here, okay, and the next candle does something like that where it runs lower then goes back up. So why do I know that it's why does this confirm that it's a breakaway gap? Well, it's because of the actions of price here. We go up, down, then up again. So okay, down, up. So those movements going up, down, up again, essentially we have offered buy side many times here. So all that's missing is sell side, and essentially we've started a new range algorithmically, Justin. So the
Okay.
market, or the algorithm, not the market, the algorithm is actually now looking between that low and that high. Okay, that's what it's looking between, and that tells me that this breakaway gap is going to be a breakaway gap. This gap's going to stay open, and that's the range we're going to use. And funnily enough, that OTE lines up with this PD array that was used for the downside being flipped like a mitigation block slash breaker and used for the upsides, doesn't it?
Okay.
So again, I know for a lot of people that haven't seen this before, this may look like a bit of advanced sorcery, but I promise, once you've seen this for a while, you understand that it's actually quite simple and very repeatable. And to be honest, this level of analysis is not essential, it's not needed. The only reason I think it can be beneficial is when it comes to understanding drawn liquidity, okay, and also understanding quality of setups, okay, because you want to be taking, for me at least, the easiest trades in terms of, the trades that run away, the trades that don't take long to move away from your entry point, okay. And if you understand how price moves, you understand kind of what you want to see, where you want to see it, and you do also understand what you don't want to see, then you can really do some powerful things if you have some good discipline to pair with that technical ability. So again, we rebound that level, essentially inverting it, going upside, going to the upside. You see that void we have on the left?
Yeah.
Now, I want you to realize how to use a level. This level, I would expect to use it to support me, okay? But this level, I know it's going to be a target at the beginning, and then eventually I want to see how we cross this level to help me gauge how we're going to go to the upside. We do have a daily PD array, which is also helping us, because when we do get inside it, we want to see us essentially stay inside it. Do you know what I mean?
Mm.
You might see we have a 0.5 level over here. It's already that daily gap. We have 0.5 level, we close above it, and then what do we do there? Respect it.
Mm.
Okay, and then we spend some time here in this gap, okay, where again we're doing back and forth, make a low, take that low out, and then we have a massive push higher. So again, just like before, just like that range over here, we are OTEing this range as well. Okay, now I want you to realize why I know this is a breakaway gap. I know it's a breakaway gap. Okay, now pay attention, guys. I know this is a breakaway gap and I can trust this range. Firstly, because of how it's acting in the daily fair value gap, but secondly, because of this level being the halfway point of this void that I'm about to draw, and then this gap here, when you see what it looks like when I draw this void, it will all make sense. Okay, so close of the previous day to the open of the next day. So pay
Mm.
attention to the 50% level as we have here. You
Yeah.
see us go above 50 and return to it there. Okay, now what about the 75 level? Well, funnily enough, that's exactly where the gap is, isn't it? Funnily enough, that's exactly where we stop all the BS, isn't it, Justin?
Yep.
Now, what does that mean to me? Well, it means to me that we have used this level, expanded away from it, and if we were very bullish, we would use the upper half of this void. And this 0.5 level, I was supporting it the way we have here. I was closing significantly above this wick is very good, okay? And if we do see a gap here, all we need to do to validate this 4-hour level, as well as what we've just done a second ago, is to look at what's happened inside that candle's range when the gap's being formed. And on the 1-hour time frame, you can see we've got a high, low, higher high. That's an important low, and that's a low that we are continuously coming back to, and as you can see here, we end up rejecting that low to go to the upside.
Yeah.
Okay, so as you can see, very beautiful price action. I have broken it down in a lot of detail. Now, what I'm going to do next, guys, is that I'm going to highlight what's happened today, Thursday. I'm going to go into the trade of the week, of the day. There was opportunities, again, as I mentioned, in the London session of CPI and PPI. However, I did not partake in those, and I don't feel like they're necessary to partake in, because more often than not, price doesn't do much before those news events. So
Yeah.
I've already conditioned myself in my model on my system to essentially skip those periods, okay? Because it will burn me more than it will work in the short times or the small amount of times that it does work. Cool.
Yeah.
So what we're going to do now is we're going to go into Thursday's price action. So 4-hour key level, daily key level as well. On the dollar chart, of course, we do see us respect it, but that movement here, it's very back and forth. You see how it's kind of a bit confusing?
Yeah.
All people need to all people need to focus on is what is happening with the candle bodies, okay? So we have a low here, a failure swing high, and we run lower again, okay? So straight away, these bodies, these candles are important. I could just use a line here, for example, goes above it at first time, taking that high out and go lower, okay? And then we go back above it, and then we return lower again, and then we push above it again, return to it again, and then we run up higher. Like, obviously, the key thing is that we know that we're bullish. At one point, we were bearish, essentially 2 o'clock. We're running liquidity out, we're bearish. But if we're bearish, then we do not want to be running the other way here and then struggling to get back beneath the midpoint of the gap. Okay,
Okay.
so this back and forth accumulation is me seeing that the market is signaling to go the other way because we struggle to go higher here, to go lower here, sorry. But then look at that low and high, it gets manipulated, low taken out, and then we start moving to the upside. But of course, we do not trade on the dollar, so we will be looking at the euro and the pound in 1 second. The last thing I want to mention is that here's a bit tight, isn't it, Justin? But if we look at the wider range, low, high, lower, low, we have a bit
Yep.
more information we can work with, a bit more levels, right? We have an actual breaker here, don't we?
We sure do.
Right, so we can look at that as a breaker. Okay, so what I did and what I think everyone should do is wait for this candle to go above the break at 7 o'clock, because that is the key time for me to know that we're not going to be inside that BS anymore, and the capabilities of price is essentially running into a void of nothingness. Essentially low resistance liquidity is resting above this range as soon as we escape that high there.
Mhm.
Cool, so let's go into the charts that do matter. Okay, so we have the euro over here, so we're going to go into Thursday's price action on the euro. Go to the 4-hour chart. So on the 4-hour chart, just like the dollar, once this level gets closed beneath, we have essentially had our change state of delivery. So we know that we're going to be bearish from then on. So that's good. And then we move lower again Wednesday, and this level is very key. I've got that blue level there, and the reason why it's blue is because it's a BPR, and what that means for me is that when price was bullish, I want it to respect that BPR, because that BPR is keeping that gap beneath it open. So I'm expecting it to run into there and then obviously run higher into this reference high. And again, I'm expecting continuation. So we come back into this 4 hour level here. We want to see us take off at the stars here at Monday, 1 o'clock, but we don't. Instead, we do a failure swing, another failure swing, and we did some SMT here with GU, okay, which did signify something strong that we will see in a second because the pound was much weaker in today's price action. But either way, we run lower here. Very nice. Now this candle, this BPR, because we've come back to it, I know that once we've entered this gap, we are no longer bullish, in case anyone was still bullish, right? From that happening, we have confirmed, you know, we're bearish now. And then this BPR, which was the POI previously and was used as support, is now being used as resistance. And we are inside that daily gap, and we are accumulating liquidity that we've just engineered, and then we manipulate it in the morning session right there. So let's go to the hourly chart. Just like the dollar, a lot of BS over here. We do have, you know, levels we can look at being closed beneath, and then we kind of start respecting them. The best level for us is to look at that breaker, isn't it?
Yep.
All right, so we have a breaker here. Forget all that nonsense. 7 o'clock closes beneath the breaker. Yep. And then 8 o'clock rallies back up into the breaker, and it then disappears. Now, what I do want to mention quickly on the 4 hour chart is if you were trading the euro, we have that swing low liquidity pool right here. And we do have a little BPR from here to there, but I'm not going to look at that. Instead, I'm going to focus on that long wick down here. And we have an order block that cuts through that wick, which I like a lot. If I was bullish, I like that. So I want to use that level because we do have liquidity, engineer liquidity, and a PD array. So as we run into there, I do expect a bit of resistance. You know what I mean?
Definitely.
As you will see on the hourly chart, once we do tap into that order block level, we do see a massive rally the other way, don't we? And that rally gets us all the way into this long wick, which did a immediate rebalance, right? And we take out the previous candle's high, we enter this rejection block / long wick, and then we start pushing lower again. So let's dive into the 15-minute chart. There's many ways to slice you know, the bread, many ways to skin the cat, many ways to do the job here, guys, with the entries. Okay, we have a 15-minute level that we obviously confirm the breaker in, and then we return back to the breaker. So if you have this 15-minute level drawn, then of course that would be an easy level to use, especially because we did not put any candle bodies until that point, and then we closed beneath it. And funnily enough, that breaker, Justin, that we drew on the hourly chart, we have a fair value gap right there.
Yep.
Now, it might not look the best because we closed above it, but having a gap in line with the breaker is very nice. Okay, very high probability. Now, if I was going to look above me, then I have a wick that went down, up, down again. So I'm saying to myself that if we are bearish, I do not want to see us going above half of that wick. And as you can see, we end up using the lower quadrant, okay, and we do not get to the halfway point. So yeah, we have that there. We close beneath it at that point, and then travel back towards it, and then look at that fart lower, massive fart lower. So what you could do is, if you're on the 5-minute time frame, if you have let that pass and you're looking at us now shifting the 5-minute time frame in your direction, we do have a swing low here. Okay, that's a massive close beneath, and it also does get outside the range. So you could be looking for a little snidey OTE over here. Okay, there's many ways you could do this. And obviously, if price is able to get back into this fair value gap, then you can frame an entry with your risk above there. So let's put that. You can put your risk above this candle's high. Again, the stop loss here is very small. Okay, and if I'm honest, I understand that a lot of people would not be comfortable with a stop loss like this. However, with the right logic narrative, it's about when that's going to be respected and what that level of your stop loss is. This is a very important invalidation level that I do not want to see get met, and it is also the high of the gap that's created, that's done something very important. So yeah, if you were able to get in with the stop loss, you could even move it to here if you wanted to be a bit more safer, 5 pips, right? Then of course there's a lot of ways you can, target. You could be looking at like you could be looking at the lows over here, or you could be looking at the order block that we had beneath us. If you remember, we had the 4 hour order block that was cutting through that long wick. That would be this red
Yep.
line down here.
Hmm.
We we travel into it, rally away at what time? 9:30. So 9:30 onwards we're rallying away, and then we come back lower, and 10 o'clock we touch the level again and have a massive push to the upside again, where we do have some more SMT. So if you were taking this first trade again over here, it's not really worth it. If you're trading down there, 2.8 would be pretty nice. But let's be honest, if I was taking this sort of trade here, we'd probably be looking at some sort of standard deviations. So let's quickly draw one. The best one for me here, if I'm being honest, we could just look at this buy side raid over here. Could use that range and extrapolate it the downside. Cool. You see that 2 standard deviation here? That's a bit
Yep.
naughty, isn't it? That shouldn't be
Yeah.
that shouldn't be allowed, should it?
That's a good target.
I should have kept that one in the back pocket, because what does that say on the price line here?
Zoom in a bit. Why 16855?
16855.
Yep.
All right. Hold on. Oops, I don't mean to press an alert there. Hold on. What does that low say?
That low says 16855.
So
Pretty nice.
random.
Yep. Pretty nice.
So random, Yeah, that's all I'm gonna say. So again, that 1.5 level, that 2 level, again, I would never target that as my exit in my actual trade. But knowing of that is very useful. Can be very key. For me personally, I would probably get out of this order block or the halfway point between this level here. Regardless, that's a 2.5. That's still pretty nice. Okay. Now the very key and nice trade that I like to highlight here is this 10 o'clock run, 10 o'clock open price, run above this fair value gap that we wicked through to take out that liquidity over here. We wicked through it, right? We went above it as well, reacting to this mitigation block up here with the SMT with the dollar. Now SMT dollar, well, what am I talking about? So we made a higher high there. If I go to the dollar at that exact time on the 5-minute chart, I didn't want to look this bad, but see here,
Yep.
945, 1020.
Mm-hmm.
That's a higher low, isn't it?
Yep.
That's a higher high on the euro, isn't it?
Sure is.
So that's a cracking correlation, okay? Saying to me that the dollar is very strong, okay? So me seeing that is important, but then what else am I looking for? Us to close back in. We close back beneath this gap here on this candle at 10:30. And then what do? We return back to the gap and we go to sleep. And look at that 15-minute wick that we have here from 9:45. 15-minute wick. We respect it perfectly, don't we? Respect that order block here. Okay, that gets respected nicely. Return to it on that candle and dump lower, but I'm not looking, am I? All right. And then yeah, very beautiful move here, going to the downside. Now, of course, this is nice. Okay, end up um we did end up hitting this level, going back up, and then essentially using that as equal lows. And because we had the order block, because the order block was a 4-hour level, I'm gonna quickly go back to the 4-hour chart and destroy this. Yeah, because that was a 4-hour level, right? I was looking to see how the hourly chart beneath it reacts to it. Okay, so I looked at how the hourly chart reacts to it, and then what did we do? We went back up to an hourly PD rate up here. Okay, and then we pushed through it aggressively. So I'm actually looking at how we're moving, and then the liquidity we engineered there, it made sense to see a continuation lower. And again, that's exactly what we see. So yeah, interesting movements there. Funnily enough, how can I just leave that without putting the trade in? Do you know what I mean? Not even showing guys what was on the table there. Okay, so this is an entry, guys, and a lot of people would not understand why. You could easily have a stop loss over here, entry here. Now let me quickly explain why this is an entry for some people. When I show you the pound, you will say, wow, okay, now that one's definitely an entry, but I want to show you why this one is also a entry. So if I was bullish here, okay, you see how we've got up close candle here, then we've got this range where we've got a long wick, blah blah blah. So
Yeah.
again, this 0.5 of this wick lines up with this gap. So what that means is I'd want this gap to support price, and I'd want this to be the lowest price goes, essentially in here. What do we see? We run above the gap, make a high, and then we run lower down here with that wick. Okay, so with this wick now, because we made a discount level, essentially this wick, in an area where essentially I want that to be the lowest price goes, I want the body to stay in there. I do not want to see us now go beneath 50% of this wick. I do
Mm.
not want to see that, because again, I want that to be the lowest price goals, and in fact we shouldn't even be closing outside of this gap here, just because of the logic that we're creating. And you know, okay,
Yeah.
what else you can mention is this gap is going through 0.5. 0.5 is going through the gap, and that 0.5 level is going through this gap over here. You see that gap there at
Mm.
10.15? That's
Yeah.
also becoming an inversion level over here, that gap that we close beneath, respect, have a bullish candle that runs the liquidity of it and then goes lower. So have a look at this, guys. Once we do close beneath 50%, we then run back up, take out that liquidity, and the bodies of the candle do not get above here. Now that in itself is very, very powerful to know that we are stuck inside this range and we are going to go lower. It will look much better on the pound. We do have a 5-star entry model on the pound to show you in 2 seconds, but obviously on the euro, massive entry in here, very tight stop loss. But with the SMT, it actually makes a lot of sense to have that as your stop loss. Do you know what I mean? And then when it comes to targeting on the downside, we've now hit that order block level. So if I was to go back to my 4-hour chart, even my daily chart, the 4-hour level was inside this wick. So if we're gonna go lower than that, well, the daily chart, we have a induced liquidity point inside that rejection block. So we do expect price to, as we said before, travel further inside there. And as we see, where's the low of the day form, Justin?
Right in the middle.
There you go. So exactly where we expected that to happen. Beautiful delivery. So if you were taking that trade, again, you do not need to get exactly where that is, but if you was to get just the 0.5 level or the liquidity, then you're looking at a lot of risk to reward potentials. Easily a 4.5 risk to reward, easily, if you wanted. Okay, and it could be more, but let's just stay 4.5. Okay, and that's already a lot. Now if I quickly and elegantly move over to the pound to end this off and show you what you can see right there, most high probability of high probability trades, I firstly have to show you this breaker, powerful breaker, discount level, massive expansion, sell side liquidity resting, market maker model. What else do I need to say, Justin? There's so much going on, isn't there?
There's a lot of confluences.
It's too many, in fact, right? So what am I looking at? Okay, well, what I'm looking at is how we react to that breaker. So we have a 4-hour level down here. All you need to know is that we ran liquidity. This is the real breaker here. Actual breaker now, not mitigation block, actual breaker. We rally into it here, leave a rejection block, rally into it 0.5 level, but look at the bodies. Look at the bodies. They never get above 25. And then we have a movement lower, And funnily enough, we're going to see a nice optimal trade entry here. Okay, into what? Into the breaker.
Yeah.
And then what happens when price gets into the breaker? It rallies into the breaker, and then just like before, we're looking for the shift to happen on the hourly chart. Again, we have a lot of nonsense from the overnight session and the PM session yesterday. But what we can focus on again is this breaker. And funnily enough, we have a liquidity pool on the left that we have used as support to go up, and then we've kind of closed through it, as you can see, to the downside. Then we went back above it, used it as support. So if I wanted to, I could just stretch this along to the right instead of using the breaker, because essentially is going to point out the breaker. I could just extend that to the right. Oops, not like that, and you can see how price is returning to the breaker right there on that wick.
Okay.
Also returning to rejection block plus rejection block, so it's essentially like a double rejection block, but for me it's essentially returning back to this one, which is breaker. So very good, very nice, very clean. And when did that happen? After the hourly chart ran into the hourly rejection block. Then it went back up for an hourly premium level. Then what did it do, Justin? Started lower, started lower,
That.
shat its pants. Look at that. Absolute deletion, isn't it, Justin? Look at those candles at 12 and 1.
So you want to be in, man?
Exactimondo. And then if we go to the 15-minute charts, and we can also draw some standard deviations here. Now, what I'm going to use for this one, I'm going to use a failure swing standard deviation. We failed here. So this failure is essentially manipulating against the bias, okay? So I'm looking at that as my standard deviation. And we extend that to the downside. We can see how prices reacted to those levels on the way down. That's going to be interesting. So cool. On the 50-minute chart again, we have a key level, which is this gray line. We've made a gap that breaks through it. Like, you see how all this price action here, I'm not gonna lie, yeah, I can look at the candles, explain stuff, but it's all just like nonsense really, until we have a gap there. That's what I like. This gap here, time wise as well. What time did the gap form, Justin?
What's that? 8:30.
Yes, 8:30. Very, very key. We've
Yeah, it's
come
key.
back. We've come back to it here. Optimal trade entry,
Yeah.
right? After hitting the hourly discount level down here, also hitting it on the 15-minute chart, ran back up, and then we have that move to the downside. Now watch this SMT with the dollar. Massive SMT, right, with the dollar. And the reference high that is being raided. Now, where's this reference high from? Let me quickly show you guys. Not on that time frames. So inside here, this high is where the gap is, right? But inside here, we have this 945 high, right? Which is where we made a high here. Now
Yeah.
that's what I'm looking at, the lower time frame, because it's just before my PD array. So we run into it, leaving a gap here, use the gap as support, fail, go lower, going beneath 50% of this wick, going beneath the reference high again, going beneath the inversion gap, going beneath the order block. Do you understand? I've just mentioned 4 areas, Justin.
Yeah.
This is a high probability change state of delivery plus IFEG. Now again, your stop loss, if you want it to be, you know, safe, could be up there at the SMT, but for me, I know it can go here and I know it can go here, so let's just for now leave it there. Okay, 4.9, close to 5, right?
Yeah.
Now again, with the targeting, we have a PD array all the way down there, but as I mentioned, we do not need it to expect it to go there. We look at the daily chart just to remind everyone, and again, we want to be aiming for targets and entries, or opportunities at least, to be understood from the daily chart. So look at that target on the daily chart down here, but I've got liquidity here and my 0.5 level of this wick that I expect us to hit. So I can have a target around here, but my target does not need to be down here, even if I think it can get there. Okay. So back to the 15 minute, back to the 5 minute. I could easily exit over here if I wanted to, because where is that? Look at this. Over there, it's just the daily equal lows. See those equal
Yep.
lows? I could
Yep.
just exit there, Justin.
Call it a day, innit?
What does that say?
Wow. You don't see that often. Once 11.8.
And then let's say we go for my 0.5 level.
Mm.
What does that say up there?
Yeah, what's that now? It's literally zooming 17. Wow. Mm.
Now listen up, guys. I'm not here trying to say this is typical, this is normal, everyone can do that. Of course not.
Yeah.
I'm not here to say that that's a typical trade for me or anyone. But what I can say is that followed the plan. What I can say is the target made sense.
Mm.
Entry was 5 star, and the journey towards it, as you could probably see, was quite you know quite free.
Oh, that's huge.
Now I know we're at the end of the video, but I thought for the people that are staying here and actually want to learn something, then seeing something like this is unbelievable. And with all the clues behind it, I think you're starting to realize now, Justin, the actual possibilities of what this trade could do and could have been. Okay,
Mm.
17.29, and that's not you going for the absolute draw on liquidity.
Oh, yeah.
And even here, as we mentioned, sorry, even here, as we mentioned, 11.8, 11.7.
What's that, about an hour? Just over an hour, the whole move?
Uh,
You good
yeah,
time?
getting all the way to here is about an hour and a half.
It's not bad.
Not bad for day's work. What's that? 100k account, 11.8. Oh, about 12k. Oh, that's a bit. That's all right, isn't it? Nothing crazy, huh? Nothing crazy, right? Okay, cool. So yeah, I thought I'd show some guys that, see if anyone admires that bit of price action. As you can see, Justin, that was a bit of craziness that we've gone into this week, especially
Yeah.
Thursday. That movement on the pound is unbelievable, and that was only able to happen on the pound because Euro GBP is finally continuing a
Mm.
move higher.
Yeah.
So monthly chart, we've kind of been back and forth,
Mm.
and then we've now closed at this high over here, and we showed support with a massive push higher. Okay, so normally um I'd want to be looking for what pair makes sense. So the dollar's going up, euro pound's going up, so I'm going to be trading the pound. But if we look on the daily chart right here, it makes sense that some people would have expected us to go lower here on Thursday. If you look at what happened, swing high there, right? 1, 2, 3.
Mm-hmm.
So some people might have wanted to go lower here on the pound, a euro pound. The only problem with that is because we have this value gap here that we went into and then did a failure swing there. So once we do close above it again on that candle Monday 11th of May, we are in a
Mm.
bullish market. So we need to disrespect this Friday order block that we trade into if we want to go lower. So if I was to draw it like yeah, if I was to draw it like this, you can see we essentially return back to the failure swing high to go higher again.
Yeah.
And the fair value gap in general, respecting it very aggressively at the higher quadrant, and then at the midpoint we're seeing that 50% order block support. So that movement on the euro pound is what's allowed the pound USD to have such a massive jump to the downside. And again, I just want to say that this is a beautiful price action, amazing price action, and yeah, the possibilities that were on the tables today is just something you want to look back on and really dig in and understand. And yeah, I wanted to highlight that pound trade. Definitely one of the trades of the year contenders. Okay, so lastly, guys, to wrap this up, because it has been a very long video, to wrap this up, to end this off, we just want to talk about what's going to happen tomorrow. So as we can see over here, tomorrow there's no news. Okay, so typically no news days we tend to stay away, but let's talk about what we could see happen. Okay, so on the dollar chart, well, I expect price to get to this target here. We're just sniffing beneath it. We are inside this long wick though, however, at the lower quadrant of it. So I'm probably gonna expect the next day, if we're bullish, to probably hit the 0.5 level, probably get above this reference high. That's what it's looking like. Of course, the typical scenario for a Friday is gonna be TGIF, which just means turns back to the range, a little retracement off the high of the week. But for now, I'm going to expect it to hit here, and then once it hits there, we could see the start of a little retracement. So that's what I'm going to be expecting for on the dollar chart. Now, if we look at the euro chart, you know, the weekly chart is in an interesting area where it is down here. If we were to have prolonged movement to the downside, which can happen, if we were to have prolonged movement to the downside, I would expect it to get very animated, because this fair value gap would stay open if the narrative is bullish, but if it gets into it, then I expect it to be invalidated very aggressively and run down it. So we need to watch out for that. But because we are at the end of the week, and we have taken out this previous week's low, I'm hoping or expecting price to essentially stay inside this rejection block. So, you know, maybe get to the lower quadrant potentially, but kind of go back up and end the day up here or something like that. I just kind of want to see price kind of chill out right now, because what I want to see next, and I shouldn't be saying this till Sunday, but what I want to see next is I want to see price OTEing Thursday's range.
Okay.
And by doing that, we have this balanced price range that I want to see price run into, which is counts as price running into this breaker here on the euro chart. So we have this high, low, high, 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 high over there. So that would be a breaker. Seeing a move into there, but then continued movement would make sense because we've had 1, 2, 3, 4 bearish close days. So I don't expect that to happen tomorrow. I'm expecting it to happen probably next week, but again, potentially you could see it happening tomorrow. Us having a move back into there, that would just mean that next week we will start off pretty strong. And then lastly, on the pound, we are down here in discount now. To be honest, guys, I do like this to be where the week ends. I like that we've reacted at this daily discount at BPR. So, you know, again, we could see like euro price expand lower beneath these lows and get into here. It's very possible, but because we've had 1, 2, 3, 4 days of bearishness, I would more likely prefer to see us stay in this range and potentially move back inwards, because if we do move back inwards now, then going further the next week, we now have that liquidity plus whatever liquidity we accumulate here to kind of travel beneath and then possibly use this level as an inversion level. Hey, see what I mean? So yeah, that's quite it. That's quite it, guys. Very big video, very long. That's the thing. I know many people are not going to be here, and anyone that thinks that me doing this is a waste of time, well, that's all to them because they're the ones missing out on the gems. And I'm happy to, of course, provide those. Justin, do you have any last remarks or words about what we've seen? Because I think you might be shocked to see what you've witnessed today.
Just lock in or clock in.
I couldn't say anything more. I couldn't agree less, Justin.
Yeah, well done, bro. Excellent.
All right, well, guys, this is going to be one of the first public videos from me, myself, PT slash Paper Tracer, and JustInTime. I hope you guys did enjoy this video. Again, it was a long one. There are a lot of gems though in there, and I hope that there are people out there that find value to be able to stick through it and really learn something. So thank you guys for watching. Thank you, Justin, for being here, and we'll catch you guys next time on the next market review. Peace out.
Yeah.